good day of trade on Dalal Street as benchmarks were upbeat on Fed rate cut optimism. Nifty reclaimed the 26,000 mark in trade today, ending just above the 26,200 level. Nifty Bank also was upbeat today in trade, hitting its all-time high level. Broader indices also outperformed in trade with both mid and small cap index ending with over 1% gain. Sectorally, it was a sea of green across sectors as metals led the gain, followed by strong buying in oil and gas and IT stocks. Snee is here with more details.
Well, yes, excellent day of trade and nothing to complain about because you had the Nifty, Sensex, Nifty Bank, that all of them did very well. Nifty has closed above the 26,200 mark. To be precise, only 72 points away from its fresh high. So all eyes are going to be on how quickly the Nifty is able to scale to those levels and potentially breach them as well. You had the Nifty Bank that was yet again at a fresh all-time high. Nifty Auto Index inched up to its all-time high as well. So all of those pockets of the market did very well. The advanced decline ratio for the Nifty 50 group of stocks and even in the broader market, the Nifty 500 stocks was very, very deeply skewed towards the advances. So the bias was very positive all across the market. And if you take a look at some of the top Nifty gainers, it was made up of names like JSW Steel, which was up 4% and a part of the Nifty Metal Index. That was the top sectoral gainer. Before we get to that, let's just take a look at some of the other Nifty gainers. Bajaj Twins did very well. Finance and Finserv both above 2.5% of gain. HDFC Life on the back of HDFC Life did very well. You had Geo Financial, Interglobe Aviation, Shriram Finance that did well. In fact, Shriram Finance and L&T Finance also touched their all-time highs as well. On the flip side, only a handful of stocks from the Nifty group of stocks in the red. Bharti Airtel on the back of the block deal pressure was lower by about 1.5%, but nothing too incremental on Adani Enterprises and Eicher Motors. Sectorally, we've spoken about how Nifty Metal did very well, the 2.5% uptick on an intraday basis alone for Nifty Metal. Names like Lloyds Metal, JSW Steel, SAIL, Hindustan Copper, Jindal Steel, Vedanta, all of them did very well and contributed to a very good move on Nifty Metal. Following that, you had names from Nifty Energy, Media, IT, Nifty Bank, Pharma, Auto, Realty and PSU Bank in that order. The least gaining sector, because remember all the sectors closed in the green, so the least gaining sector was the Nifty FMCG sector, and that has also closed with gains of about 0.7%. So very strong move coming in from the least gaining sector as well. It was names like Varun Beverages that did very well, followed by United Spirits, Nestle. So these are some of the stocks from the FMCG group of stocks that did very well. If you take a look at some broader market gainers, Natco Pharma was up about 11%, GMDC, JK Cement, PG Electroplast, DCM, Shriram, all of these stocks did well. On the flip side, Chennai Petro was deeply under pressure amid a market that was doing very well. A 12% cut on Chennai Petro. MRPL, M&M Finance, AWL, Agri and Transformers and Rectifiers saw some cool off as well. So that is how the market shaped up, about 72 points away from a fresh record high coming in for the Nifty 50. Let's see if you're able to scale to those levels and cross those levels as well as we approach the monthly Sensex expiry.
Nifty Bank has hit an all-time high, but will the up move sustain? And which stocks are aiding the move? Ashesha is here with all the details.
Nifty Bank has hit yet another record high, so we decided to take stock of what analysts are penciling in for the next 1 year. And from the current price, Nifty Bank could scale highs of 66,720. That's the consensus estimate when it comes to Nifty Bank over the next 1 year, implying over 12% return even after the kind of up move that we have seen on a year-to-date basis so far. So yes, analysts continue to remain very bullish and 12% upside is what they are penciling in. ICICI Bank, meanwhile, is at the top of their list, where 12-month target price indicates a 24% upside for ICICI Bank over the next 12 months, followed by Kotak Mahindra Bank at about 14%. HDFC Bank could give returns anywhere between 13 to 14% over the next 1 year. SBI at about 9% and Axis Bank at about 7%. So analysts are penciling in as these top 5 stocks to be leading Nifty Bank over the next 1 year. On the downside, let's also talk about stocks that will not take charge and the stocks that will not help Nifty Bank scale fresh highs. One, of course, is Kotak IndusInd Bank that continues to face regulatory challenges. 11.5% downside is what we could see on IndusInd Bank over the next 1 year. Let's also talk about
AU Small Finance Bank 5.5% lower. Federal Bank, Punjab National Bank and Canara Bank, all of them could give negative returns over the next 12 months. So yes, for Nifty Bank, we could see over 12% upside, but we also took some time and put spotlight on individual stocks that will lead charge for Nifty Bank over the next 12 months.
Saurabh Mukherjee, Marcellus Investment Managers, expects earnings to grow if consumption picks up. He also shares his picks from Consumption Basket. Listen in.
Order earnings picture slightly better. So for the quarter to September, BSE 500, NSE 500 earnings growth, I think, was around the 10% mark. And if consumption picks up further through 2026, even the broader earnings picture should improve. What I found remarkable was how moderated, how sober Nifty EPS growth had been for 2.5 years. And that's why the 1% figure for the quarter to September, I think that's going to improve sharply for the quarter to December. But yes, even in the broader market, given that consumption is the majority of our economy, if consumption improves, there'll be cheer all around on the earnings picture for the whole market. And we are seeing very encouraging policy action, which suggests that the government is seized of the gravity of the situation and is making the necessary fiscal adjustments. In parallel, the RBI seems to be making the necessary monetary adjustments to get consumption back on track. And if we get consumption back on track as a nation next year, I think Trend will be a big beneficiary of that, because in that space, value apparel space, it's clearly head and shoulders above the competition.
Moving on to an exclusive. Sources are telling ET now that NITI Aayog is holding meetings with industry stakeholders to boost FDI in India. My colleague Sumita joins in with more details. Over to you, Sumita.
That's right. Exclusive sources have told us that NITI Aayog has been holding meetings with industry stakeholders on boosting FDI in India. In fact, representatives from Tencent consulting and legal firms, Axis Capital, amongst others, including BYD, are some of those who have attended these meetings. Now, these meetings have been held also to evaluate recommendations around FDI, gauge investor sentiment. In fact, NITI Aayog could also essentially look at identifying 50 companies out of the Fortune 500 companies to encourage them to increase FDI in India. And of course, in some of these meetings, issues related to Press Notes 3 have also come up. Of course, NITI Aayog has gotten feedback, has gotten a sense of what the investment climate is like. What are these companies stating with respect to Press Notes 3? And in fact, we are also given to understand that the government in the near future could be open to supporting some companies sharing a land border with India, provided that they bring investments into India, and of course they give investment commitments, and localization efforts are also boosted by these companies. In fact, a meeting on mobilizing supply chains is scheduled for Thursday, and overall the focus of these meetings is going to be on improving investor confidence, simplifying rules, creating conditions to attract greater foreign capital in the country. Remember, this is coming in after Commerce and Industry Minister Piyush Goyal met with stakeholders and VCs last week. And of course, the government said that sources suggested that the government is open to suggestions that are allowing investment in India's interest. And of course, the focus is going to be on ease of doing business. In fact, there are efforts that the government sources have told us that there will be efforts to speed up approvals, and that India will be taking decisions on easing investments that are in national interest. Remember, this meeting was also attended by stakeholders from SEBI and RBI, including VCs.
IMF sees India's gross domestic product growth in fiscal year 27 trimmed to 6.2% if the high US tariffs stay, according to global financial bodies' 2025 consultation report released. My colleague Ankur Mishra joins in with more details.
Yes, important comments are coming in from IMF on India, especially the comments on the GDP growth, whereby it has maintained that FY26 GDP is seen at 6.6% and FY27 at 6.2%, with the prolonged 50% US tariff, and that consideration is there. But without that, even India's growth is expected to stay robust, as well as favorable domestic conditions are there, and that has been highlighted in IMF comments. In fact, the agency has already said that despite external headwinds, India's growth expected to remain robust. Now, these important comments are coming on the backdrop of GDP data, which is set to be released this week and even before the monetary policy, which will be decided next month, whereby the growth and inflation dynamics will be kept in mind. While on one hand, the inflation numbers have been much below the forecast which has been made by Reserve Bank of India of 2.6% for FY26, but the latest number, the latest data we know of last month came in at 0.25%. And on the other side, the projection are there that for the Q2, the growth can be around 7% or so, and these are the estimates. And Q1 surprise are already there at 7.8%. It will be interesting to see how the central bank is taking all these into consideration. But for now, IMF is having a strong commentary on India.
Well, on that note, it is time for us to slip into a short break. You don't go anywhere. We will be right back. Welcome back. You're watching Business at 9. I'm Shibani Gharat. Now, owners of tens of thousands of properties in England, valued at more than £2 million, are set to be hit with a surcharge of at least £2,500 from 2028 in what has been dubbed a mansion tax. The annual charge will come on top of existing council tax and will increase depending on the price of a property with 4 separate bands. These, in fact, will go from the lowest band of £2 million to £2.5 million, with the highest for those valued at £5 million or more, who will pay £7,500 a year, with a bulk of all the properties affected based in London. Now, US jobless claims declined to lowest levels since mid-April. Initial claims decreased by 6,000 to 216,000 in the week ending November 22nd, suggesting a rebound in the labour market, which typically is bearish in the push for a rate cut. However, despite this development, Bitcoin rose on the back of the data release, reaching $87,000 from an intraday low of around $86,400. Now, in a landmark move, India has revved up its rare earth mission and is raring to go. The cabinet has approved a kind of a scheme to promote manufacturing of rare earth permanent magnets with an outlay of nearly 7,300 crore scheme. The scheme aims at establishing 6,000 metric tons each year of integrated rare earth permanent magnet manufacturing in India. Under the scheme, the total capacity will be allocated to 5 beneficiaries through a global competitive bidding process. Each beneficiary will be allocated up to 1,200 MTPA of capacity. First, let's listen to what Union Minister Ashwini Vaishnav had to say post the cabinet meet.
आज एक रेयर अर्थ परमानेंट मैग्नेट्स स्कीम REPM स्कीम अप्रूव हुई कैबिनेट में. माननीय प्रधानमंत्री जी ने अप्रूव किया इसको. इसमें फोकस रहेगा एंड टू एंड कंप्लीट इंटीग्रेटेड मैन्युफैक्चरिंग सिस्टम बने, भारत में इंटीग्रेटेड मैन्युफैक्चरिंग फैसिलिटी बने. इस पे करीब 7,280 करोड़ रुपए का इन्वेस्टमेंट होएगा. 7,280 crore rupees will be invested, and the focus will be on the entire value chain. It will be an integrated manufacturing facility. और केवल एक नहीं, up to 5 units will be established. Up to 5 units will be established, each one having 1,200 metric tons per annum capacity.
We also had Chief Economic Advisor V. Anantha Nageshwaran S. speaking on the cabinet approving rare earth bill. Let's listen in.
But obviously it's important. It's a long-term goal that we have to become self-sufficient in these areas, because we don't want our manufacturing and growth aspirations to be held hostage to the shortage of these materials due to whatever factors.
And now let's go across to my colleague Prakash Priyadarshi for more details on this.
Well, it's a confirmation of our news break as the Indian cabinet has approved rare earth permanent magnets incentive scheme with an outlay of rupees 7,280 crores. So very significant development coming in. This scheme is very crucial in order to achieve Atmanirbharta as far as rare earth magnets are concerned. The scheme has been approved for 7 years, and the production unit will have to be developed within the next 2 years. This is very crucial amid supply side disruptions, and various sectors are going to get benefit. You can look at the structure of the scheme, where the government is focusing on developing entire value chain from extraction to production of rare earth magnets. Along with that, if you look at the sectors such as defense, auto, aerospace sector, electric, among others, are going to get a benefit. Along with that, the government is moving ahead with the target to achieve Atmanirbharta. As per the government's estimate, the domestic requirement of rare earth magnets are going to be doubled by 2030, and therefore government is moving ahead with a clear objective to achieve Atmanirbharta, cut down import dependency by announcing a separate incentive scheme for the production of rare earth magnets. Along with that, the cabinet has also given its nod for the extension of Pune Metro with an outlay of rupees 9,858 crores, where Maharashtra Metro Rail Corporation Limited has been appointed as implementing agency. Last but not the least, the cabinet has also approved 2 new rail projects with an outlay of rupees 2,700 crores.
Now, it will be interesting to find out what will be the impact on the rare earth stocks of this announcement. My colleague Raghav Kalra gives in more details.
Stocks to watch out for, as Government of India has given a nod to 7,280 crore scheme to promote manufacturing of sintered rare earth permanent magnets, REPMs. The stocks to look out for under the scheme will be Hindustan Zinc, moving positively and has secured India's first private sector monazite rare earth mining block in Uttar Pradesh with direct rare earth processing capabilities, and it will benefit from its increased demands from domestic rare earth supplies under the PLI scheme. Well, another stock to look out for will be Gujarat Mineral Development Corporation, GMDC. It's a stock that's moving positively, and it's building India's first dedicated rare earth processing hub and actively participating in critical mineral auctions. Its direct operational expansion and its strategies will help this stock to again move positively in this particular sector. Another stock to look out for will be NLC India, moving positively. It secured its new phosphorite and limestone blocks with plans to source rare earths domestically and overseas. Its dual sourcing strategies and new mining block position by NLC will help it to capture more market, moving positively again. Vedanta is also moving positively. It's the parent company of Hindustan Zinc with aggressive expansion into critical mineral and rare earth mining processing. Hence, Vedanta will be a stock to look out for. Another stock which has recently undergone IPO is Midwest Limited, moving positively. It's India's largest black galaxy granite producer and is expanding into high purity quartz, and hence will be a stock to look out for under the PLI scheme proposed by the government. Secondary beneficiaries that we should be looking out for will be National Mineral Development Corporation. It has global rare earth exploration plans. Coal India, which has its collaboration with India Rare Earth Limited. Magnesium Ore India Limited, which is involved into diversification into magnesium to rare earth conversions. Hindustan Copper and Sona Comstar are also to look out for, as they are applicants, PLI applicants for rare earth magnets. Bharat Forge is also a stock to look out for because of the impact this particular scheme will have on the auto sector. JSW Group, ONGC, Oil India, Sundar, Magnesium Iron Ores, and IMFA are also stocks to look out for in terms of secondary beneficiaries when we talk about.
On recent detention of Indian citizen at Shanghai airport, MEA spokesperson Randhir Jaiswal took a strong stance against detention of an Indian citizen and reiterating Arunachal Pradesh being an integral part of India. Let's listen into him.
See, we had issued a statement. Essentially, I was translating the statement that we had made earlier. Yesterday, we made a statement. You would have seen that regarding the arbitrary detention of an Indian citizen from Arunachal Pradesh who was holding a valid passport and was transiting through Shanghai International Airport on an onward travel to Japan. We want to say that Arunachal Pradesh is an integral and inalienable part of India, and this is a fact which is self-evident. No amount of denial by the Chinese side is going to change this indisputable reality. At the same time, I said that we did take up this matter. We did do a strong demarche with the Chinese side, both in Beijing and in Delhi, when the incident took place.
South Africa ended a 25-year wait for Test series win on Indian soil while crushing a 408-run victory in the second Test in Guwahati today, a result that also handed India their biggest defeat in the Test history in terms of runs. Chasing a mammoth 549, India were bowled out for 140 in second session on day 5. Team India and its head coach Gautam Gambhir has come under severe criticism from fans, experts and former cricketers too for Team India's poor performance in the two-match Test series against South Africa. Gambhir has said it is up for the Board of Control of Cricket in India to decide if he is the right man to be in charge of the Test team going forward. Listen in.
We win together, we lose together. So I'm not going to be someone who's going to say that it lies with X, Y, or Z. It lies with everyone sitting in that room, as simple as it can get. Start prioritizing Test cricket if we are really, really serious about Test cricket. And that is something which is important. That is going to happen overall, where everyone needs to be the stakeholder for that. So if we really care about Test cricket, if we want Test cricket to flourish in India, I think we got to have a collective effort to make that happen. You don't need the most skillful and the most flamboyant players to succeed in Test cricket. You need the toughest characters with limited skills who will go on to succeed in Test cricket, irrespective of how the conditions and what the situation is.
Do you think you're still the right man for the job, especially in Test cricket?
To BCCI to decide. I've said it during my first press conference when I took over as the head coach. Indian cricket is important, I'm not important. And I sit here, say exactly the same thing. And yes, people can keep forgetting about it. I'm the same guy who got results in England as well with a young team. And I'm sure you guys will forget very soon because a lot of people keep talking about New Zealand. And I'm the same guy who won Champions Trophy and Asia Cup as well.
Times Network's Karishma Singh filed a report earlier today on this.
Absolutely. This has been a very shambolic performance from the Indian cricket team, losing the first Test in Kolkata and now losing the second Test in Guwahati, losing the Test series 2-0. South Africa winning their first Test series in India after a gap of 25 long years. And the batting on display has been very, very poor from the Indian team. You talk about Rishabh Pant, this particular match, not even in double digits. So obviously, there is a lot of introspection to do. Gautam Gambhir coming in the post-match press conference after India was defeated by 408 runs and saying that the blame lies with everyone. In fact, he was also asked about whether he is the right man for this job or not, and he said that that's for the BCCI to decide. But people are forgetting that I have also won the Champions Trophy, the Asia Cup, and that players played well under me in England. So Gautam Gambhir was quick to remind about his laurels as well as far as this series loss versus South Africa is concerned. And in fact, we've lost to New Zealand as well around the same time in 2024. And up until then, for 12 years, we hadn't lost a Test match at home. So where is Test match cricket going as far as India is concerned? As far as India's chances of World Test Championship are concerned, is something that the BCCI will need to look into.
Indeed. So India, in fact, lost to South Africa, their second series on the Indian soil, on the home ground. On that note, it is time for us to wrap this business at 9. Goodbye. Thanks for watching.